Okay, so in this video we want to continue from where we stopped the last time. Okay, so the last time we did say that we did look at the relationship between units sold and variable cost. Okay, in that video we said that variable cost is dependent on units sold, which means that the more units we sell, the more variable cost we incur in the business. Okay, which means that the relationship between units sold and variable cost is direct or positive. All right, so the less unit we sell, the less variable cost we incur. No units sold or produced means no variable cost is incurred. All right, so we continue by looking at the relationship. Or I haven't said that before looking at the relationship between units sold and fixed cost, it's important to note in this video that variable cost in total is different from variable cost per unit. Variable cost in total differs from variable cost per unit. Variable cost in total is dependent on units sold, like I said earlier, okay, while variable cost per unit is fixed. It does not change irrespective of the unit sold. Okay, so let's look at the relationship between units sold and fixed cost. Between units sold and fixed cost. The question is this: what is a fixed cost? A fixed cost is that cost that remains unchanged. A fixed cost is that cost that remains unchanged irrespective of activity level. All right, so an example of a fixed cost are salaries paid to admin staff, the rent paid for the use of the business premises, fixed overhead expense, and so on and so forth. Okay, so fixed cost is quite different from variable cost. Okay, we said variable cost does not change. Variable cost changes with level of activity. This is unlike fixed cost. Okay, so an example of variable cost, by the way, is sales commission, variable overhead expenses, and so on. So like variable cost, fixed cost can also be in total. All right, so that's that. So we now continue by saying that fixed cost, all right, does not change irrespective of activity level. Fixed cost remains the same irrespective of activity level. So if this is true, it means that it is unchanged. It is unchanged. It is an unchanged relationship between fixed cost and unit sold. Okay, so we take it a step further by looking at the concept of contribution to sales ratio. The concept of contribution to sales ratio. What is contribution to sales ratio? This is denoted by C over X, right? What is contribution to sales ratio? Contribution to sales ratio is also called CMR, that is contribution margin ratio. It is also called contribution margin ratio. Another name for it is a profit volume ratio, that is PVR. So contribution to sales ratio is the ratio of contribution to sales. It is the ratio of contribution to sales. All right, so what is this ratio saying? It is looking at, it is a function of contribution and sales. Like I said earlier, contribution is a function of sales. The more we sell, the more contribution is earned. The more we sell, the more contribution is earned. All right. So CMR is not expected to change at any activity level. It is not expected to change irrespective of the sales level. Okay. What this means is that as long as there is no change to selling price per unit and variable cost per unit, as long as no change occur in selling price per unit and variable cost per unit, CMR, which is same thing as what? Contribution to sales ratio or PV ratio, is not expected to change at any given sales level. CMR is not expected to change at any given sales level. If this is clear, what it suggests to me is this: if the CMR, for example, if sales revenue is given to us as say 100, if sales revenue is $100,000 and CMR in this question is given to us as say 20%, and CMR is 20%. The question is this: what is contribution? What is contribution? Contribution, of course, we can get contribution, using CMR. We can get contribution using CMR. All right. CMR in this question is 20%. So you say 20% of $100,000 sales revenue. So CMR here becomes 20. Contribution here, for example, becomes $20,000. Okay. So contribution CMR can be expressed with sales revenue to get contribution. That's what we are saying. CMR can be expressed with sales revenue to get contribution. All right. So if CMR is given as 20%, all right, so and you are asked to calculate contribution, just express CMR, all right, express it with the sales revenue given, you'll be getting contribution. All right. If this is clear, what if the question goes further to say determine variable cost? Determine variable cost. So what will variable cost be? This is very simple. From the formula of contribution, we did say that contribution is sales less variable cost. All right. So if contribution is equal sales less variable cost, all right, so we already know what our contribution is. We know what our sales is. Now we want to determine what the variable cost is. Okay. It's a function of making this variable cost to become the subject of the formula. All right. So we have variable cost in this way. Variable cost will be equal to contribution, will be equal to sales minus contribution. So we have variable cost is equal to sales as given here is $100,000. What is contribution? Contribution is $20,000. So we have our variable cost to be $80,000. I hope this is clear. All right. So that is it. So again, this is how to use CMR or contribution to sales ratio to get contribution, all right, or to even get variable cost. Okay. So if this is clear, we move to the next concept we want to talk about. Let's quickly move to the next concept we want to talk about. Okay. Let's discuss in detail what break-even is. Let's discuss in detail what break-even is. What does it mean when we say a business is at a break-even point? it's important we know that a business may be faced with three different scenarios. Number one scenario is profit scenario. Number two scenario is loss scenario. Number three scenario is what? Break even scenario. When a business is faced with a profit scenario, what does it mean? It simply means that total sales or total revenue is more than total cost. It means total revenue is more than total cost. So a profit scenario is sales revenue is greater than what? Total cost. A loss scenario is the reverse. It means that sales revenue is less than total cost. A break-even scenario means that sales revenue is equal to what? Total cost. If this is true about break-even, all right, it means that at break-even point, total revenue equates total cost. Okay, so break-even point is that equilibrium point where total revenue or sales revenue is equal to total cost. All right, so let's take our mind back to what contribution is. We did say that contribution is equal to sales less variable cost. It is also true that contribution is equal to profit plus fixed cost. Please take note of this formula of contribution, especially the second. Profit is equal to, contribution is equal to profit plus fixed cost. Now the question is this: don't forget, at break-even point, sales revenue is equal to total cost. What does this mean? At break-even point means profit is zero. Profit or loss, it means profit or loss is equal to zero. Don't forget, at break-even point, the business is neither making profit nor making a loss. All the sales revenue equate all the cost. All right. Now, what will be contribution at break-even point? That's the question. What is contribution? What is contribution at break-even point? That's the question. What is contribution at break-even point? Do not forget that contribution normally is equal to profit plus fixed cost. All right, but at break-even point, we have contribution to be equal to only fixed cost. Since we have said at break-even, profit is usually zero. All right, since profit or loss is equal to zero, therefore at break-even, contribution would no longer be fixed cost plus profit. Contribution would now be only equal to what? Fixed cost. At break-even sales, contribution is only equal to what? Fixed cost. So questions to be asked to you: determine break-even sales. Determine break-even sales. All right, or determine the sales at which total revenue and total cost is the same. Okay, so how would you calculate break-even sales? Please look up. To calculate break-even sales, all right, let's calculate sales. Let's calculate sales at a predetermined profit. All right, do not forget, there are different scenarios a business is faced with. All right, profit scenario, loss scenario, and break-even scenario. All right, so let's calculate sales at which a predetermined profit is to be made. We will also calculate sales at which a predetermined loss is to be made. Then we'll now calculate sales at break-even. I hope this is clear. All right, so let's take it from here. Let's say an example is this. A business vendor is operating at a point where selling, this is an example. A business vendor operates at a point where selling price, the selling price of the business vendor, let's assume is $100, while the variable cost of the business vendor is say $60. Then the fixed cost is say $40,000. Now the question is now this: calculate sales at a predetermined profit of say $5,000. Okay, so you have forecasted that you'll be making a profit of $5,000. Okay, so all these variables have been given to you. You have selling price per unit to be this, variable cost per unit is this, fixed cost is $40,000. Okay, now you're now asked to calculate sales. Question is this business operating at a predetermined profit, or at a predetermined loss, or at a break-even? Okay, so clearly they have told us that there's a predetermined profit, so it is operating at a predetermined profit. How would you then calculate sales? Please look up. To calculate sales, solution will be sales at a profit of 5,000. Sales at a profit of $5,000 will be equal to contribution all over contribution per unit. All right, which is further equal to, what is contribution? At profit, contribution is equal to that predetermined profit plus fixed cost. Where a profit is predetermined, contribution is equal to profit plus fixed cost. So we have the profit here plus fixed cost. All right, if this is clear, question is this: what is CPU? Please note that CPU means contribution per unit. CPU means what? Contribution per unit. All right, contribution per unit is also like selling price per unit. It's also like selling price per unit, which is not expected to change. All right, unless there is a trigger to selling price per unit changing. Okay, just like CMR, or contribution to sales ratio, which is also not expected to change, contribution per unit is also not expected to change. The only condition when contribution per unit would change is where there is a change in either selling price per unit or variable cost per unit. Therefore, what is contribution per unit? CPU is selling price per unit, SP, minus variable cost per unit. So what is SP in this example? The selling price per unit here is $100. What is the variable cost per unit? The variable cost per unit here is $60. So the contribution per unit will be 100 minus 60, that is $40. Therefore, in calculating the sales at a 5,000 predetermined profit, we will be having that predetermined profit of 5,000 plus fixed cost as given, which is $40,000 all over the calculated CPU, which is $40. When this is calculated, that will be 45,000 divided by 40. We'll be having 1125 as the unit sold, as is break-even sales unit. The break-even sales unit here is 1,125 units. This is a break-even unit. This is a break-even sales unit. Now let's take it a step further. All right, should you be asked from this example, determine break-even sales revenue? This is break-even. This is sales. This is sales at a predetermined profit of $5,000. It is giving us 1,125 units, right? So it means that for the business to make this profit of $5,000, it has to be selling at 1,125 units or more to be making this profit. All right. Now, what if the question is asking you to determine sales revenue? Note that what we got here is sales in unit. If you are determining sales revenue, to determine the sales revenue is just a function of sales revenue at 5,000 predetermined profit. Sales revenue is just a function of multiplying the 1,125 units we got multiplied by selling price per unit. Okay, all right. So you'll be having 1,125 units times this this selling price per unit is what? $100. So we're having the sales revenue to be 112,500. I hope this is clear. All right. So let's look at where a loss is anticipated. This is example 1. So for example 2, let's assume that the sales vendor is having the selling price per unit to be $100. For example, the variable cost per unit is say $60, just like what we have, and then the fixed cost is say $40,000, and then we have the anticipated loss. We are asked to calculate sales. Calculate sales at a loss of, at an anticipated loss of say $10,000. You anticipate there will be loss at $10,000. Why should the business anticipate there will be loss, all right, at any given point where the sales department have not done a good job, where there has been poor advert, and where there has been sharp decrease in demand? So a loss can be anticipated. All right, you want to calculate the sales level at which you will make the anticipated, or at which the anticipated loss of $10,000. All right. So once this is the case, what should you do? All right, you want to calculate this sales so that you can further project better. Okay, so what do? In calculating sales, do not forget, at any point you are calculating sales, the formula is always contribution over CPU. Contribution over CPU. Now, what would be the sales? Answer: the sales at the anticipated loss would give us contribution over CPU. Okay, so when a business is making a loss, what does it mean? It means that the business is not making a profit. It means that the profit is negative. Okay, so you'll be having it this way: you'll be having contribution to be equal to fixed cost minus loss. If it were profit, it would be fixed cost plus profit. Now that it is loss, it will be fixed cost minus loss all over CPU. Don't forget what CPU is: selling price per unit minus variable cost per unit. Okay, so let's move ahead. So if this is the case, what do we have as our fixed cost? Fixed cost, like I said, is constant. Fixed cost is given to us to be $40,000. The loss given to us here is $10,000. All right, so we have the CPU calculated to be $40. Do not forget, CPU does not change unless there's a change in selling price per unit or variable cost per unit. So what are we saying? We are saying 40 minus 10. So if 40 minus 10 is giving us 30,000 divided by 40, we'll be having sales at which a loss will be made to be 750 units. 750 unit sales. All right, 750 unit sales. All right, so at this 750 unit sales, the company or the business can plan better, forecast better, so that for them to come out of the loss, it has to first make break even. Okay, at break even, it now shoots to profit. Okay, but if there's effective advert and sales promotion, it can go from this loss situation of $10,000 to a position where significant profit is made. All right, now again, if the examiner is asking you to calculate this sales revenue, in to calculate sales in value, okay, you already know what to do. Anytime sales is requested to be calculated in value, it means calculate sales revenue. You have to multiply unit by what? Selling price per unit. Good. All right, so to get sales revenue, you say 750 units times 100 times $100. This will give us $75,000. I hope this is clear. Now, very quickly, we'll move to the third scenario, which is what? Which is to calculate break-even sales. We have looked at the calculation of sales where a business is making profit, or where a business is expected to make a predetermined profit. We have looked at that. We have looked at sales where a business is expected to make a loss. Now I want to look at sales where a business is expected to break even. Okay, again, at break even, profit is zero. Do not forget, at break even, profit is always what? Zero. Okay, so using this example, let's assume that the business has total revenue to be equal to total cost. What would be the break-even sales, both in value and in units? What will be the sales both in value and in units? Good. So we assume this remains the same. The selling price per unit and variable cost per unit are constant, as well as fixed cost to be $40,000. So the question is, using the example above, above, calculate break-even sales revenue and units. So the solution would be break-even sales revenue will give you contribution all over CPU, where contribution is equal to only fixed cost. Please note that at break even, profit is zero. This is because profit is zero at break even. I hope this is clear. All right, so what is our fixed cost as given to us in the question? Fixed cost remains $40,000. What is the CPU? CPU remains $40. Therefore, what will be the sales? What will be the sales? Since we are looking at sales revenue, do not forget that once it is sales revenue you are calculating, all right, you have to multiply by selling price per unit. Multiply by selling price per unit, which is what? $100. Correct. So what will be the sales revenue? The sales revenue will be $40,000 divided by $40. That should give me 1,000 units. 1,000 units times, that should give me 1,000 unit times $100, which is the sales revenue, which is the sales selling price. This time this will give me what? $100,000. So sales revenue in this instance is what? Sales revenue in this instance is $100,000. So this is the break-even sales revenue, $100,000. What does this mean? This means that for the business to remain in the industry, all right, and not to be making a loss, the sales revenue should be $100,000 or more. $100,000 or more. Any slight decrease in sales will result in a loss position. All right. So what if the question goes ahead to tell you calculate break-even sales in unit? Break-even sales in unit. What do? Just divide. Since you want to get in unit, divide the revenue by selling price per unit. Okay, just come here and say $100,000 divided by what? What is the selling price per unit? $40. So what will be the figure? All right, so what we are doing is we are dividing $100,000 by 40. All right, so we are having 2,500 units as break-even sales unit. I hope this is clear. The same explanation, all right. At break-even sales unit, it means your company is operating at 2,500 units. What does this mean? It means that for the company to have its total revenue equal to its total cost, it has to be producing or selling 2,500 units. Any attempt to sell below 2,500 units, this business will be operating at a loss. This business will be operating at a loss. By implication, we are saying where this business produces or sells below 2,500, say 2,499 units, the business will be operating at a loss. But where it sells above 2,500 units, it will be selling or operating at a profit. I hope this is clear. All right. So if this is the situation, so we quickly move to the next concept. Okay, before I move to the next concept, I want to demonstrate with an example where at different sales level, how sales revenue, revenue, contribution and variable cost would be reacting. Okay, since we have said that in the previous video, we did say that units sold affect positively sales revenue, contribution and variable cost, right? So in this next example, we want to demonstrate that. But before we go right ahead, it's important we look at sales above break even point. Sales above break even point. Okay, now you will get to know what I mean by that. So let's look right up. Sales above break even point is the next thing I want to talk about. Sales above break even point. Sorry, before I go ahead to talk about sales above break even point, something came to mind. You will notice that I said at any sales level, where the examiner asks you calculate sales, whether sales revenue or sales in unit, you will discover that I have always used contribution over selling price per unit. Contribution over selling price per unit. Now my focus is that selling price per unit. My focus is this selling price per unit. Now this brings to mind, there are two approaches to calculating break even or cost volume profit analysis. There are two approaches. The approaches are approaches of calculating break even. Number one is contribution per unit approach. Number two is contribution to sales ratio. Please look up. These two concepts by now are not new to us. The first one says contribution per unit approach, which is same thing as well CPU. You have seen me, calculate CPU. CPU means contribution per unit. All right. So this is an approach to calculating sales. Okay, it's an approach to calculating sales, but using what? Contribution per unit. Using contribution per unit. What does it mean? Again, I said that CPU is what? Selling price per unit minus variable cost per unit. Please note again, CPU will not change at any point unless there is a change to selling price per unit or variable cost per unit. That is one. This is one way of calculating CPU. Another way of calculating CPU is to say CPU is equal to total contribution all over units sold. All right. If you have total contribution given and you have units sold given, you can get CPU in this way, or you get it in this way. Whichever way will give you CPU. Why am I emphasizing on CPU approach? This approach, no question will tell you use CPU approach or use contribution to sales approach. No question will tell you. The nature of the question, seeing the question, you would know the approach to use. So it's important you familiarize yourself with these two approaches. All right. Now, when will you use CPU approach? CPU approach would be used. Please listen. CPU approach will be used when selling price per unit is given in the question, or when variable cost per unit is given in the question, or when unit sold is given in the question. Please note, selling price per unit may not be given in the question. Variable cost per unit may not be given in the question, yet you can still use CPU. What is important is that is unit sold given. All right. So once unit sold is given, that means sales revenue will be given. Just divide sales revenue by unit sold. You will get your selling price per unit. Do you understand? Invariably, we are saying where any of these three variables I have marked are given, you can use CPU. Do you understand? If you look at the questions I have solved so far, any of these three or all of these three variables were given, so I use CPU. Okay. Where even one is given, you can use CPU. Where all the three are given, you can use CPU. Is that clear? Fine. Good. Now, when are you going to use contribution to sales ratio? Please look up. When are you going to use contribution to sales ratio? Please note, in the previous, before now, I did, tell us that contribution to sales ratio also means what? It also means CMR. What is CMR? It means contribution margin ratio. Okay. Now, while CPU is calculated in per unit, CMR is a percentage. CMR is a percentage of sales. CMR is a percentage of sales. That means expressing contribution as a percentage of sales. Okay. Do not forget again, contribution is a function of sales. The higher the sales, the higher the contribution, and vice versa. Again, contribution can be calculated as a percentage of sales. If that is the case, what does that mean? It means that contribution can be expressed as a percentage of sales. Where contribution is expressed as a percentage of sales, we call it contribution to sales ratio, or you call it CMR, or you call it PVR. Is that clear? Let me give you an example. Let's assume that sales revenue is $100,000. This is sales revenue, $100,000. Sales revenue is $100,000, and you are told also that contribution is, say, $20,000. This is contribution. If this is contribution, the questioner is calculate CMR, which can also be called contribution to sales ratio. Calculate it. How do you calculate CMR or contribution to sales ratio? Please look up. It's what you know. Since we have said or we have defined CMR or contribution to sales ratio to be the expression of contribution as a percentage of sales, it therefore means that we can say C over S, which is contribution to sales ratio, or CMR, is equal to contribution over sales, since it is in percentage, times 100. So the C numerator is contribution, the S denominator represents sales. Do you understand? Therefore, what is our contribution? Our contribution here, the numerator is $20,000 all over $100,000 times 100. Something tells me our C over S is what? 20%. Is it clear? 20%. So this is how we calculate CMR. Again, demonstrated how we calculate CMR. This is how CMR or C over S is calculated. Okay, so if contribution to sales ratio is 20%, who can tell me what the remaining 80% represents? All right, if contribution is taking 20% of sales, what is taking the remaining 80% of sales? Obviously, since we have said contribution is equal to sales minus variable cost, all right, so if this contribution is taking 20% and this sales is 100%, it invariably means that variable cost is taking 100% minus 20%. This is what? 80%. So what it means is that in any exam, all right, and the examiner wants to be mean, the examiner will require calculate contribution margin ratio, or C over S, where variable cost ratio of 80% is given. So when variable cost ratio is given, how will you determine CMR? How will you determine contribution margin ratio? All right, it's just a function of netting off the variable cost ratio from 100%. You'll be getting what? CMR. All right, so to get CMR, just say 100% sales minus the variable cost ratio, which simply means 100% minus 20. Okay, variable cost ratio is 80% minus 80%. The CMR, or the C over S, contribution to sales ratio, will be what? Will be 20%. Then you can now use this 20% to determine your total contribution, to determine other stuff you want to determine that the question is asking you. I hope this is clear. All right, so let's move forward. Now, if this is clear, I rub off the board. Now we are still on how to use contribution to sales ratio as an approach to calculate sales. How do you use contribution to sales ratio, which is CMR or PVR, to calculate sales level? All right, whether at a given profit, whether at a given loss, or whether at break even. How do you use CMR, and when do you use CMR? When will you use CMR? You will use CMR when no clue is given as to selling price per unit, variable cost per unit, and unit sold. Some question will come all in value. No unit sold, no selling price per unit, no variable cost per unit. Okay, you'll be given sales revenue, variable cost, fixed cost, all those variables will be given to you in value, but no units. All right, so in that case, contribution to sales ratio becomes very useful. So again, we are saying CMR approach is used where no clue on selling price per unit, variable cost per unit, and unit sold is given in the question. I hope this is clear. Let me take one or two examples to demonstrate it before I move to the next thing I want to talk about. All right, let's take down this example. Let's assume that the sales revenue of a certain business venture is say $100,000 when the variable cost is $20,000, okay, and fixed cost is say $40,000, and the question is asking you calculate calculate sales unit to achieve a certain predetermined profit. What is the sales unit to achieve a certain predetermined profit? Okay, now what is the sales level to achieve a predetermined profit of $20,000 $20,000. So this is the question. This is the question. All right. So we are still going to look at a past question towards the end of this video or the next video. All right. We'll still look at a past question, a full-fledged past question. All right. Whether ACCA or ICANN. All right. We'll look at a past question on break-even analysis. All right. I'm giving us these minor examples to enhance our knowledge so we can move forward, and so that even you yourself you can pick up a question and you'll be able to flow and solve yourself. Okay, now let's look at this question. Okay, so in this question we are saying that the company is currently operating at a sales revenue of $100,000 when the variable cost is $20,000. The fixed cost is this. What will be the sales level? Okay, all right. I mean, the company is forecasting what will be the sales level to achieve a predetermined profit of 20. Let's say the predetermined profit is $30,000. Good. So the solution will be this. Sales level at a predetermined profit of $30,000. Do not forget, in this example, is selling price per unit given? No. Is variable cost per unit given? No. No. Is unit sold given? No. No clue at all. Therefore, you are going to make use of CMR approach or contribution to sales ratio approach. You won't make use of selling price per unit approach. All right. How do you make use of approach? Again, to calculate any sales level at all, you must start with contribution. Okay. So your formula, the numerator will now be contribution over CMR. Do not forget, CMR simply means contribution to sales ratio. This right here. All right. So if this is the case, you have your contribution to be equal to fixed cost plus that predetermined profit. All right. What will be our fixed cost? Our fixed cost in this question is given to us as how much? As $100,000. Our fixed cost is given to us as $40,000, while our profit, the predetermined profit, is given to us as what? As $30,000. What is the CMR? CMR is simply, don't forget, CMR is ratio of contribution to sales, which is what? Now you can now get your contribution. Your contribution is what? Sales minus variable cost, which you know. All right. Sales is what? The current sales is what? $100,000. So if this is $100,000, what is the current variable cost? Is what? $20,000. So the contribution, the total contribution is what? 100 minus 20. That should give me what? $80,000. I hope this is clear. So if I already have my C to be what? If my C is $80,000, then what is my current sales revenue? I have it to be what? $100,000. All right. My C over S, which is my CMR, will be what? 0.8. Is this clear? So if that is clear, so your denominator will now be 0.8. So if that is the case, therefore, what will be the sales level to achieve that targeted profit level of $30,000? So you say 40 plus 30, that is $70,000 divided by 0.8, and that's giving us $87,500. $87,500. $87,500. So this is the answer. $87,500 becomes the sales level at a 30,000 targeted profit. Is this clear? Is this clear? Is this clear? What it means that where you must use CMR approach or contribution to sales ratio approach, no clue as to how to get units sold will be given to you. Therefore, the solution must always be in value. You cannot get sales level to be in unit at this point because no clue as to units sold was given in the question. Okay, whatever answer you are getting must always be expressed in value. Correct. Now, the next thing I want to talk about here, using this same example, of course, if a loss situation was given to you, if this profit was a loss, please take note. If this profit was a loss, assume all these data given are repeated, but this profit was a loss. Okay, a predetermined loss of $30,000 was forecasted. All right, so and you are asked to determine the sales level at that predetermined loss position. Okay, so what are you going to do? What will your contribution be? It will now be fixed cost minus that loss. Loss is usually negative, profit is usually positive. So that's the only thing that will change in this approach. Okay, if this profit were to be a loss, just put fixed cost minus loss. Then you now come here and say $40,000 minus $30,000. Is it clear? Then you get your answer. Then you'll be fine. Good. Let's assume the question says, what is the sales level to add? What is the break-even sales level? That is the question that is being asked. So we want to use CMR approach to answer that question. What is the sales? What is the break-even sales level? So this is the question. If this is the question, now how do you approach this question? In approaching this question, you need to understand, again, I emphasize, at break-even, profit is usually zero. Do not forget, profit is usually zero. Every other thing remains the same. Profit is usually zero. Is this clear? Is this clear? So if profit is zero, what do you do? What you would do in this instance is say solution. All right, say sales level to break even. Don't forget, at break even, total revenue is equals total cost, where profit is zero. So to the sales level will now give you what? You say contribution all over CMR. We are using CMR because no clue as to get selling price per unit, variable cost per unit, and unit sold was given. So again, contribution is equal to what? Fixed cost, because profit is zero. What is the CMR? We already have our CMR to be 0.8. Do not forget. All right. So if this is the case, we have fixed cost to be $40,000 divided by CMR, which is at 0.8. Please figure me. What would the answer be? The answer would be 40,000 divided by 0.8. The answer would be $50,000. $50,000. You just see that. So that is it. To break even, it means that this company has to be operating at a sales level that is $50,000. Where it operates, where there's a drift, the company starts to experience a loss. where the company shoots sales forward by, even if it is 1 unit extra sold, the company will start to experience not break even but profit. Is this clear? I hope this is clear. Now, so the next to talk about here will be I still have a number of things to talk about, so that you have a comprehensive, knowledge of this topic. Wherever they are bringing out the question from under the heaven, you'll be able to tackle it and get your 100% mark. All right. So the next thing I want to talk about is, like I said earlier, the different sales level. How would sales revenue be reacting at different sales level? How will contribution and variable cost be reacting? That's one. Secondly, I want to talk about margin of safety. It's important you understand what margin of safety is in today's business world. All right, so that when people are talking to you, you will be carried along. You will be talking from an informed perspective. Do you understand? All right. So what is margin of safety? What is margin of safety? So I'll be talking about that, and then I'll be talking about where the graphical method of calculating break even or sales is required. How do you tackle such question? So I'll be talking about graphical approach as well. All right, so please stay tuned as I take you through that. All right, thank you very much.